So I want to thank folks for coming back. I see some faces that are familiar from last week. So I guess we didn't scare you away completely. And you're still working on this process. So I'm gonna share my screen. What we committed to this week, week 2, is to focus on the budget. And what I will also say is feel free to interrupt me, ask questions as we go along. This is really intended to be much more of a dialogue than me just spouting off information. There are some things I may not be able to answer, and we may need to, get guidance other places and being able to move forward. Um, and so I want to always go back to grants.gov because particularly where we're talking about the budget, there is some very specific budget information. So I'm logging into my account and getting to my workspace for my grant application so we can look at the budget data that is required to be put in and in the format. Okay. So we're going to manage it here. So the first section that requires budget information is on the SF424 form, and that's your application for federal assistance. Every federal grant that anyone applies for requires this form to be completed. When you get in, you have to identify what type of application. So for this competition, it would be an application. You can either check new or continuation. I would do new. Um, I don't think anybody gets dinged for selecting continuation, but there's really not a whole lot of guidance for existing programs that are applying for funds again. You want to focus on those that have the red. Those are the sections you have to answer. The other items are either optional or they're pre-completed by grants.gov. Number 6, we don't have to complete that because you don't have to share your grant with the state. What is your legal name, taxpayer ID number? So this is all that preprint on your organization. What department or division name are you under? Who to contact in matters involving the application, title, organization, type of applicant. And so you'll see here, federally recognized or other than federally recognized for state tribes. I'm sorry?
I'm doing the webinar. I don't know, that's up to Tom. That's up to the 2 Toms. Okay. No idea. I didn't mean to do that.
I'm having trouble hearing.
The K would be for a consortia. I worked
Yes.
on this the other day. Okay.
Yes. And then you'll see all of this gets pre-printed in. You don't have to go digging for that. What's the descriptive title of your project? What congressional district you're in, and applicant, your program project, dates. And then this is number 18 is where you're starting to fill in. So what is the federal amount that you're asking? And this is over the entire 5 years. And the applicant. So this is the indirect. Not indirect. You're matching And then the program is not covered by EO 12372. So you're not subject to review. Um, is your organization federally debt delinquent? Those are things your financial office should be able to answer. So I'm hoping everybody says no. The applicant
So what's,
certification.
what was the answer for 19?
19, it's C, this program is not covered by Executive Order 12372.
Thank you.
And then your applicant certification, who is your authorized representative? Their information has to be completed here, and then it gets transferred into the other documents. But this is the where your first entry of budget information is required. And so it is important that your budget information is consistent. So it'd be really bad that you have a total federal budget different than what you have in other places in your application.
Hello?
Those are,
Are you on?
No, I'm trying to get on over here in the building. Are you on right now?
Yeah.
I
Okay.
don't know who's talking, but you probably want to mute.
Bernadette.
So
So we would put what we're asking for in the federal part. If our match is from the state, is that where we put our match? Or where do we put our
If your
match in
match
there?
comes out of state fund, it's coming through the applicant.
Okay,
These other items are when there are funding that requires like commingling or like that there's a pool of state funds or local funds that all go in together. The only program I know that generates program income would be Mary with Mississippi Choctaw. I think she's the only one that would be familiar on this. I don't think anybody else generates program income.
An authorized rep is like the president or the chief chairman.
Yes, whoever is for your organization, your the person that signs off on the grant.
Oh, here we
That's
go.
considered the sign off.
she's trying to get it on there,
Okay,
but until
thank you.
then, you.
Thank
watch
you.
it there.
Thank you.
okay, thank you.
Thank you, Shannon.
I don't know who's talking.
If you click on the participant list off on the right, you actually can see who is not muted. And then when someone speaks, you can see their microphone showing up who's talking. So I don't know if you want to call them out directly or not, but bottom line is you can see who's talking when that happens.
Yeah. Thank you, Christopher. I would just ask folks to just be mindful that where if you're having sidebar conversations and you're not muted, we can hear you. And this is being recorded. So thank you. So I'm not going to say because we're not writing. But the other thing I want to come down to the Ed SF 424 supplement. And I think we went through this last time. This is asking who the project director is. They are going to want to know, are you a potential, the new grantee or novice applicant? And typically they're asking this because they want to know if it's a contracted grant writer.
Yeah, I just want
Primarily
to,
that's
I want to
writing.
double check. What you're saying is like most of us who don't do grant writing for a living
We're
would actually
novices.
would be considered novices, even if we've
Right.
done one of these before.
Correct. Like I've written several grants. I do the bulk of the grant writing for our tribe here, but I am a novice grant writer because I am not a paid grant writer. That is not my primary job responsibilities. That's not my primary function. I don't make my profession as writing grants. And then this is not a human subject, it's not a research project. This is new for anybody that did these last time. This is a new form. So I just wanted to make sure we reviewed that. Don't be surprised when you see it. Um, and the U.S. Department of Education Budget Information Non-Construction Program is the meat and potatoes of your grant. So you will fill in the name of your institution, organization, these main budget category items. This should actually correspond to your written budget narrative. So it's easy to translate the detailed description of your budget to this summary. And then identifying the breakdown by year. And so then you'll have totals that'll generate for each of these all the way into your total for the year. So personnel, who are actually personnel that are attached directly to the grant, even if it's a portion of their time, needs to be included. Fringe benefits, travel, equipment, supplies. Now, and equipment is defined typically as anything with a useful life over $5,000. Um, so if you're buying computers for your staff, let's say your program's been around for a while and it's time to update computers and things like that, if that's not covered under an indirect cost, then that doesn't fall under equipment because the individual computers don't cost $5,000 each. But if you're looking at other items that may be over that, typically it's not a typical VR expense unless you're having to buy equipment. I'm gonna mute some folks, sorry, y'all. Um, is when you may run into it, but typically that's gonna fall under other, where you're listing client services, consumer services, and you
So
don't
we c-
know until you get there.
So we can leave equipment blank if we don't have anything that's gonna be over
Right.
$5,000?
Correct. Yeah, supplies, contractual, construction should be zero, because we're considered non-construction grants. And then anything that doesn't fit into these falls into this other category unless it's an indirect expense. So then, and this chart will populate the totals for you. So we'll just do like a quick example, where you'll see it automatically calculated for you. Christopher, you have your hand up?
Yes, I was taught that equipment, it's not a $5,000 per item, but it's a $5,000 expense that you're expecting to spend. So if you plan, for example, to buy enough office equipment that's going to go over $5,000 or computer equipment, I was taught to put that in the equipment category, even though an individual desk or an individual computer might not cost that much. But if you plan on buying $5,000 worth of those usable for over a year, expensive things, then to put it there. I mean, obviously a car would go in there, but
It becomes the question of, do they act together in one? So if, for instance, you have like a workstation, so it's the computer, printer, scanner, but it's not necessarily computer for me, my staff, because those are unique and distinct for different people and purposes. And I'm trying to find the actual definition of that because I worked on a statement about that a while back. So if you give me a second, I'm going to pull that up. While I'm looking that up, are folks having to do this budget form themselves, or is someone else within your tribe doing it?
I did ours myself and just had our accounting department kind of double check it.
Okay, good, good.
So can you clarify again what's going on with the equipment? What is the rules for it? Because now I'm confused.
So I'm trying to find what's in the actual legal definition of equipment and that kind of stuff, and that's why I'm on pause with y'all. If you just hold on one second.
Thank you.
Because there is some language about things together, what gets lumped together, but I don't think it's so vague as everything. It's things that together work as one. Is my understanding. And so I would say Christopher and I have different interpretations, so we need to pull what the actual language is. I don't remember what I called that document is what I'm trying to find it. I'm not finding it. Let me look it up directly. To CFR 200. So if you ever need to look up anything on the federal fiscal policies, it is found at 2 CFR 200. And so I am pulling it up directly from the federal guidelines. So I'm going to stop sharing and switch over to a different screen so we can look at the definition of equipment. So I went looking for the definition of equipment, and so it is at 2 CFR Part 200, 200.1 definitions. And then when we come down to equipment here, let's get to it. There we go. So equipment means tangible personal property, including information technology systems. So that's what the reference to computer systems, having a useful life of more than 1 year and a per unit acquisition cost, which equals or exceeds the lesser of the capitalization level established by the non-federal entity for financial statement purposes. And that basically means whatever your tribe considers the threshold, or $5,000, whichever is the lower threshold. And so that's the issue to me, Christopher, is the per unit acquisition. And so the whole thing of like a computer system, so it's not just the monitor that it's the monitor, the actual CPU, printer, your keyboard, and all of that together would have to equate to would be considered equipment if it was above and beyond $5,000. But to say all furniture that would not necessarily be housed together or used conjointly as a per unit um is the issue now, unless they're honing in on the acquisition cost, that because you're actually purchasing them all at the same time. Is that the challenge you've gotten?
Yeah, that's how I was trained, is if you know you're gonna make an acquisition where that's single, whether it's just a computer or the entire office, you know you're making that. It's as if it's one thing. So you got your computer, your printer, your desk, your chair.
Right.
You're gonna make the acquisition all together today. You're gonna go on Amazon.com, let's say, and buy it all today. It's gonna exceed 5,000, then it should be called equipment.
Christopher, I wonder if that is some of your own tribe's rules, because I know with our tribe, items that are defined as equipment is left out of the indirect cost rate negotiation pool as well. So, our tribe would not want us to define things like that as equipment, I don't think, because they would not get to charge indirect on the process of purchasing those items. So it could be your
Right.
internal
This
tribe.
was wasn't it's not it's for us, it's not related to the tribe's rules or policies,
I'm
but
gonna
that the
I'm gonna say there was a person at RSA once upon a time that had a more global view of this, and we definitely didn't agree on the interpretation of equipment.
yeah, so
Because
we put
the
it in our
whole
grant last
intent,
time, and I
yeah,
don't think RSA didn't say anything to me about, oh, it should have been supplies or shouldn't have been supplies. They
yeah, because the whole intent, and there's some language I think further down where it talks about expenditures, and let's see where it's at. I am gonna find that document I have, because we deep dive, and I shared that with RSA. Is the whole issue of, and that's where they identify the issues of like for and why they included information technology systems is because people were saying, well, I'm just buying this, my monitor or my this operates alone, but it's the combination of all of it that acts together. So like having a monitor alone serves no use without it being connected to the CPU, to the printer, to the a scanner or whatever your setup needs to be on to that extent. But your furniture, I don't think is intended to be that way. They can act independently. Um, so I'll find that and see if we can get some more clarity on that. Does anybody else have any input on equipment? I'm looking at the
So I reread it, and what I recall from the training was that essentially, if you could imagine in your head that this thing is going to be uh, able to be sold you know, improperly, so someone could take a computer and sell it and make money off, or it brings value, like property value, then you would probably err in calling it equipment. So in my head, when I reread it, I go, yeah, I totally see what you're saying, that computers or desks don't necessarily have to be any equipment. That would make sense, but a car would.
Right,
So even if, yeah, so the car actually has a value that you could turn around and sell it, obviously.
right. And it's not like you're gonna break the car apart to, it's one cohesive unit,
Right.
yeah. Or even, let's say, even buying something for a consumer, maybe they're looking to set up a portable food trailer, and so you might need to buy the food trailer and a generator. Well, the generators needed to make the food trailer work. Those two together would potentially count together because they have to act in tandem. I'm reading through folks' comments and that kind of stuff.
Yeah, you're forcing me to rethink how I did the grant last time, so that's great. I appreciate it.
No, no, and again, like your tribe may also have other feedback on how they anticipate you answering these questions. So that's also areas talk with your finance office because they definitely should have their own interpretation of this as well. Okay. So let's jump back over to so again, this is the budget summary. You'll go and you can include those, your indirect costs. VR grants typically do not have training stipends. That's typically for more along the lines of training programs. And then your non-federal funds. So whether that's in kind or that's actual cash, but which budget items, line items are they being allotted to? This is excuse me, we got some more folks joining us. That's great. If there is a limit on administrative expenses, it states in the grant that we do not. This would be an area where it says list administrative cost caps. You would just put NA. And you would leave this as is. Any questions about this entry? Okay. We're not going to save this. And then just to review your budget narrative, you upload it as a PDF, always a PDF. And it would be added here. Add an attachment and you would put it there. If you have any optional budget narrative forms, then you'd add them here. Any questions about the grants.gov section and how to do that input? Great. I see, Christopher, you're going to ask your compliance officer. Yeah, please let us know. And I'll also share the items I've had before. Okay, let's talk budget. Budget. Are folks familiar with the performance measures that relate to cost efficiency?
Yes, ma'am.
Okay, hit them, Mary. What are they?
We have to serve individuals with less than $10,000 of federal funds, and we have to place and close successfully, meaning employed 90 days, individuals with less than $35,000 of federal funds.
Okay. Is that clear as mud for everybody?
Not at all. This is the first time I'm hearing this.
So,
Yeah, I haven't heard it either, I'm sorry.
so VR has what they consider budget efficiencies in efficiency measures. Um, and they are looking at comparing how many people do you propose to serve in comparison to your total budget and a cost per person, and how many people do you propose to close successful and that cost per person. Um, and that was the section Mary was finding. I'm trying to find in the actual grant announcement where it's listed so that you guys can highlight it in your grant announcement. So that's where I'm trying to find it.
I just have a question.
Sure, go ahead.
So the employed successfully, 35,000, does that mean for like the overall 5 years? Or is it when they come in the first time and let's say they come back the second time?
It's typically per year.
Okay, per year. And that's per individual, right? Per consumer.
Yes.
Okay, so to serve individual with 10,000, what is that one? Is that the same thing? I guess I'm just kind of
That's the
confused on.
number you propose to serve under.
Okay,
And I found it. So if you give me a second, I'm gonna pull that up. So this is in the actual grant competition document in page 27. So please note that if the total value of your currently active grants, cooperative agreements, and procurement contracts from the federal government exceed 10,000. Oh, no, nope, that's my wrong number. Hold on, let me find
But
it.
if you would come back to that section, I want to talk about that as well. I have a question about that.
Okay, we will. Okay. So here are the percentage of individuals who have not left the program. These are your performance measures. So here is the percentage of projects that just demonstrate an average annual cost of services per participant of no more than $10,000. That's the efficiency. So that's when they will consider you being an efficient program. And then the percentage of projects that demonstrate an average annual cost per employment outcome of no more than 35,000.
So when I asked this question of my project officer like a year ago, and so how she reads it is we're talking about an average. You're really talking about from the first day of the grant up to fill in the blank of what date you're asking and saying on average, are you costing $35,000 or less for every successful closure? And on average, is your program costing $10,000 or less for every person you're serving in an IPE?
Annually.
Well, she told me it's like you don't look at year one and say, did you did you match these numbers well in year one? It's more like if you ask in the 18-month mark, you could say, okay, at 18 months, if I averaged $35,000 of cost for every
Mhm.
successful closure or less than that. And so she said, it's not like you get judged for year one and then judged for year two and judged for year three. She said, over the
And
course of the whole 5 years is what you
and
really
and
get
yeah.
judged on.
And I think as well as they'll also look at, are there extenuating circumstances that are going on that may change or affect any of these things? However, this is certainly a tool in when you're looking to determine whether your budget that you're proposing is going to be identified as being efficient. It's something to go back and look at.
Right.
Go
So
ahead,
no one
Julie.
should write a budget that is going to show that they cost more than 35,000
Well,
for
I
every
think you
successful
can if
closure.
you can justify it, but you need to definitely make sure you can justify why your cost may be significantly higher than other folks's. Go ahead, Julie.
So in my budget narrative, I'm proposing to serve 125 consumers a year. And with what I allocated for services, I'm averaging just over 65,000 per consumer for that year.
It's your total budget, not
Okay,
not your
not per
consumer
year.
budget.
Okay,
It was not the consumer, just the consumer budget. It's the entire budget.
okay. So if I have it in there like the way I just said it, that's okay to put it in there like that? Because that's how our last grant had it. I'm just kind of going by what that had. In my narrative. I'm
Yeah,
just a little confused, sorry.
no, that's okay. And let's go up here. So this again is talking about the performance measures. These are the 4 performance measures they're gonna be looking at in this grant competition. Of those exiting the program, the percentage of individuals who leave the program with an employment outcome after receiving services under a program. I mean, that's what we're about. We should be seeing people moving out, leaving the program successful. The percentage of individuals who leave the program with an employment outcome after receiving services under an IPE. So those are comparisons, say the B. The percentage of individuals who leave the program without an employment outcome after receiving services under an IPE. And so again, it's the whole thing of ideally we should have more people leaving with successes as opposed to those without. The percentage of individuals who have not left the program and are continuing to receive services under an IPE. It is common that you would have people that would stay on. I mean, sometimes some people need more than a year, and to say that everybody is in a cycle that you stop and start in a whole year just isn't the way voc rehab works. Um, it is something, that they're going to look at that. And then these performance measures.
I have a lot of questions about that whole section you just read.
Look, I don't like the way they've retooled the language here because before it used to be a lot clearer. It's a lot fuzzier, and I'm sure that's to be able to give the leeway in understanding there may be circumstances that impact some of these numbers. Because it's as clear as mud.
So
Yeah.
to me, this kind of looks like the GEPRA measures that we just,
It is.
okay. So when we did our annual reports recently, that we were told that C and D, we don't report on that. That's what,
We don't, they calculate it based
they
on
calculate.
actual spending compared to the outcome. So it's nothing you have to address in your grant.
Okay.
I would just say as you're looking at your budget, you definitely want to look at, do you have an efficient budget? If you don't, then I think you need to be ready to answer or justify why you may need above and beyond the efficiency measures.
Okay,
is your-
that clarifies it more. Thank you.
What is your interpretation of the difference between A and B1? Language is very close to identical.
Of those exiting the program, the percentage of individuals who leave. So this is of all those exiting the program, so I'm assuming they're looking at a percentage of what we used to call the rehab rate.
Is
Because
that through like
it's
the
the
whole,
comparison of all those exiting the program.
So all includes all the people you closed because they were not eligible, all the people you closed because they fell off the, you couldn't find them. All the
Anybody
people.
who was served under a plan.
So,
So
okay,
those who
you
closed
still only talk,
successful divided by those who closed successful and unsuccessful under a plan. And then what your
okay, so you're
rehab
not
rate
counting the
is.
ones who came in the program and then they never came back.
Or
You're counting
never got into a plan.
only the ones who got into a plan. That's
Right.
letter A. So
Yep.
everybody who got closed after they had a plan written.
Yep.
And I've
And
even,
Okay.
August at a conference, say that if somebody is in a plan and loses eligibility, let's say they move out of your service plan, that those don't have to be closed unsuccessfully, but they can be closed as an ineligible individual. Because I asked the question specifically, why do we have it counted against us if somebody moves out of our service area? It's not, and that's more ineligibility. I know that kind of makes the water muddy as well.
yeah. And so the B1, 2, and 3 are actually one performance measure in total together.
Oh.
Okay, so can, as someone who's never written a grant before, ever, and has no idea what you guys are talking about, and I'm about ready to
We didn't know,
cry.
we didn't always know what this was either, okay? So
I'm like, I thought
don't,
I knew what I was doing, but now I'm like,
no,
I
no, no.
don't.
This is,
I just
this
want to
is
make sure I
just,
understand. C and D, we don't have to include in the grant proposal, but that is good
No.
for us to know with our budget. If I
Correct.
heard everyone correct,
Cor-
okay, thank you very, okay,
correct.
yay, I got that, woo.
Correct.
Thank
C
you
and D,
guys, I
you don't
appreciate
have
that.
to address directly, but you should know it's out there because
So I
you're
should
going to
know
be
it's out
graded on it.
in my
Yeah.
brain. Okay, excellent, thank you so much. Awesome,
Yeah.
thank you guys.
But you see, Christopher, how A is here. So A is 1 because there's 4 performance measures. It's saying that there are 4. So A, B, C, and D. So B has 3 components that are part of one performance measure.
Wow, I totally read that differently, but I appreciate you saying it that way. That does make a lot more sense to me now.
Well, and look, and when you lump these 3 together, it is very, very subjective to interpretation because it doesn't discuss how these interconnect or how they're interpreted, or to even say, like, is it bad that you have a high percentage that that are still in the program, or is it just something that's being tracked? I'm not overly fond of B because it's not exceptionally clear to me. And I think that's the confusion. Thomas, you have your hand up?
That's you. Okay, actually,
Is Thomas still there?
Thomas, we're using his laptop. He's not included here. We're asking questions
Oh,
on
gotcha.
his laptop. And Cho is the one that has a question. She's helping to write the grant.
Okay, go
Go
ahead.
ahead.
Okay, the question related to the per outcome of no more than $35,000. Does that include the match? Are you looking at the total program budget, or are you looking only at the direct cost funded by the grant?
I have always looked at it from the direct, the federal funds.
Is that only the federal funds we're using to calculate the number of outcome?
Because it says the average annual cost, but it doesn't say the total cost. So I've assumed that to be the federal. Has anyone interpreted it differently?
I asked a project officer years ago, it was Sonia, and she said, just like you did, it's how much you're asking the feds to fund divided by 35,000, not the total, which
Okay.
would include the match.
Yep.
That helps.
Yep.
Thank you.
Okay, the
Yep.
second question I have is related to the match. Because, you know,
Mhm.
there. So in the budget justification,
You're cutting in and out. I can't hear you. I we'll come back to you if you can fix the I see y'all are muted on Thomas. Um Feel free if you
We must have bad connect. We must
okay, I
have
can
bad
hear you. I can hear
connectivity.
you now. I can hear you now.
did you say you're going to come back?
No, I can hear you now.
Okay.
What was question two?
Oh, so earlier you didn't hear us. Okay, the question was of the 10% minimum tribal match, what form of documentation are you requiring us to provide to support the match? Is that something we can document in the resolution? Just say the tribal council.
If it's a cash match, I would say that's definitely helpful to be able to have that commitment in there so that the
Okay, so are there any other, like if we have partners who is contributing in kind, do you want them to state that in the letter of support or?
I think that's always helpful. It's always helpful because it backs up your claim of what you're writing in the narrative.
Thanks.
Mhm. Okay, Elena?
The question I have is the formula that Christopher sent us is gonna be based off of how much we're requesting,
Correct.
dividing, and then figuring this formula out. That cannot be over 35,000 per consumer. It's just weird. These are big
So-
numbers because
So
our
the
TDR,
35,000 is not of the total outlet of the fund, it's the federal amount
oh, okay.
of what you're asking for federally.
Mind if I chime in quick?
Yeah, go ahead, Christopher.
So if you ask for $350,000 this year, Alana, then that would divided by 35,000 would mean you're also suggesting you can have 10 successful closures this year. $350,000 to run the program divided by $35,000 means you can get 10 successful closures. It also means 350,000 divided by 10,000 is 35. That means that's how many people you would serve in an IPE. So if you are asking the feds for $350,000, that means you're thinking you're going to serve at least 35 people in an IPE, and you're going to close at least 10 successfully.
And that's per year though, right? So we need to do a
Right,
5-year.
350,000 in this year, right? And then, over a 5-year period, if you're doing $350,000 each year, that'd be each year the same thing.
Okay.
But what
And
it
then
says is average.
And then the non-federal share of $350,000 is to divide by 11, correct,
No,
Christopher?
divide by 9.
Divide by
You
9.
had the right
Boy,
idea.
look at me,
One
I'm
off of
just,
10, yeah. Divide it by 9 and now
Mhm.
you know how much the match has to be.
So your match would be 38,888.89.
Right.
Would that be total match or just direct cost?
Your direct cost or could be a combination of the two. It actually, well, I always keep my non-federal as a separate budget altogether. I don't blend it with my federal budget.
Right, that's how I've got mine. But I came up with, so when I divided my total that I'm asking for from the feds by 9, is that just my total direct costs or is that include the indirect costs?
That's your non-federal. But you're including your indirect of the total federal. So your total direct federal plus indirect.
Okay. It'd be easier if I could share my numbers, but I don't want to.
I know, I understand.
And
It
it's
would, it
easier
would
if you,
be nice to have a whiteboard and just, draw it out for us.
right.
There might be a way. Let me see if I can do that. Sometimes there's some tools on here, but I don't see it.
I don't know if that document
Okay.
I sent out on the 121 last week, I don't know if it helped anybody, but it does explain some of this.
Well, let's see. Let me
Yeah, I'll probably just
I'm
look
gonna
at.
stop sharing for a minute and I'm gonna switch over back into the grants.gov because I think it'll be easier to see it on that chart. Give me a second. And we can work through it together. Okay, so we're gonna try to do this. So let's say your total direct, and this is your federal cost, or 350. You see how horrible I can write here, right? And let's say your indirect is 50,000. I mean, we're just tossing some numbers here, right? So then your total cost, and again, this is your total federal cost, is 400,000. So then when we're pulling the non-federal, is the 400,000 divided by 9. And let's see what that gives us.
$44,445 rounded up.
44,000 for what?
445. 445. So that number is the number you have to promise to match.
So that's your non-federal. And this is your federal.
And
So
the
then,
federal divided by the 35,000 tells you you have to have 12 successful closures that year.
Please say that again, Christopher.
So the 400,000 at the bottom left, you divide that by the 35,000, and that tells you need to have 12 successful closures. So you end up taking that 400,000 and you put it into three formulas. There's a formula for match, which Lenore drew on the top. There's the formula for how many successful closures that they would expect. And there's a formula for how many people you would serve in an IPE in that year. So the first formula for match is divide that number by 9. The second formula for successful closures is divide that number by 35,000. And the third formula is take that number, divide by 10,000. So
I'm sorry, what was the 9 for?
that's
Your
for match.
non-federal match.
But why are you dividing it by 9?
Because it's the 10% of your total grant
Got
cost.
it. Okay, got it. Thank you.
I'm glad you said thank you, because most people get a little frustrated with it being 10% and 9
Because
doesn't seem to make sense.
you actually end up matching your match, which is really weird. And so if anybody, after I do this, if you want to like screen copy this, not that it's pretty.
I actually took a picture of it with my cell phone for reference.
Yep.
If anyone wants to give that a go, as well as the formula that Chris posted in the chat.
Then that way you can kind of see the examples of things you've got to manually calculate. That'll help you. So I'll give you guys a minute to do that. The folks that are there with Thomas's laptop, did you have another question? Or because I still see the hand up, I just want to double check.
Yeah. Coming over us, and I think it's due to the storm, but we keep getting cut out, really bad service. So we're not
Gotcha.
understanding everything that you're saying.
Well, the recording is getting sent to Avertech, so hopefully you may be able to access it of what you missed. I'm so sorry you guys are having storms.
No worries. Thank you.
Mm-hmm. Okay.
I got it, Lisa.
Okay. Has this helped? Okay.
Yes, it's helped me.
Okay, wonderful. So going once, going twice, I'm gonna stop my screen sharing here and we'll get rid of this. Okay. All right.
Can you really quickly go back to the page, not to the part that you were drawing, but what we were reading with the outcomes and stuff on it, so I can look at that really quick and kind of think about what you just put on the on your screen. Yeah, that one.
And so again, this is, again, you don't address it, you don't need to address it in your grant, but just something you need to be aware that you will be evaluated on. Okay. Ready to move on?
Someone's asking how long it takes for this to be uploaded to AverTech.
I don't know. They were having trouble last week, so I'm hoping they'll be better this week. Because I think they're trying to figure out where to put it on their site. But I have sent it, so. Mary,
Thank
I'm gonna, yep, no problem. Mary, I'm gonna come back to the, this section.
Thank you.
Mm-hmm. Okay. This is referring to, I think, more your finance office. So they're saying if your tribe, your, or cooperative, consortium receives more than $10 million in active grants, cooperative agreements, or procuring contracts from the federal government, then the reporting requirements in 2 CFR Port 200 Appendix 12 requires you to report certain integrity information to FAPUS semi-annually. I will say I don't know what FAPUS is. This is new language, so this must be some new things that are coming in. I would think this is something that your finance office would do, but let me look and see what that FAPUS is.
I think it's that federal integrity system
Mm-hmm.
where they evaluate, in our case, tribes for their financial integrity. But I haven't seen that before listed, and I need to call it to
It
attention.
is, so I'm looking at it right here. I'm gonna pull it up in a separate, I'm gonna switch screens for you. So it is Federal Awardee Performance and Integrity Information System. So it says before awarding a contract in excess of the simplified acquisition threshold, which I'm assuming that's what the $10 million is, the contracting officer shall review the performance and integrity information available in the Federal Awardee Performance and Integrity Information System. So there's a spot for it, including information from the Systems for Award Management, which is SAM. And SAM's where everybody has to be registered. Your tribe, because you're receiving federal funds already, you're all good there. Exclusions and the contractor performance assessment reporting system. I would assume there is someone in every one of your organizations who already deals with this. I don't see that as something as that you have to address to that extent. Let's see, let's go back. So it says if you are selected under this competition to receive an award that over the course of the project period may exceed the simplified acquisition threshold. They make a judgment about your integrity, business ethics, and record of performance under federal awards. That is the risk posed by you as an applicant before we make an award. That's what happens in the that everyone has to be centrally registered in SAMS.gov because SAMS.gov becomes the place that stuff gets collected.
Lenore, can you drop that link in the chat box so we can just check with our finance offices on that part?
On this one, the
Just
four.
please. Thanks.
I sure will. Okay. So we have about 20 minutes. Is there anyone, I want to make sure if anyone has any very specific questions we haven't gone through yet regarding budget, you can go ahead and we'll try to address that.
I do, so
Mhm.
our company, Great Lakes, is moving to this MTDC rate instead of an IDC rate.
Mhm.
This is totally brand new to us. I have no idea. Our CFO is still researching things, but she did mention
It's still an indirect cost rate. It's just a different way of calculating it based on your total.
right. So the thing that she has brought up to me is that certain items can be removed when calculating.
There's
And
actually a worksheet, and I'm going to pull that up.
perfect. Thank you, because she's still researching all of this. And I'm trying to get my stuff done.
I actually will share my screen. And this is actually a worksheet we've used before. So this was a different grant. And you pop in all of the information, all your salaries, again, the line items that gets put in. And this was not a horribly huge grant, but decent. Contractors, if there's contractors that are estimated. So anybody who's a contractor or a subaward, um, and this is specifically subawards we're not allowed to do, but we can have contractual relationships. But if you have named people in your grant as contractual, so if you're doing an external evaluator, if their cost, whatever their cost may be, the max you can receive um, on their total is 25,000. It's the first 25,000 on that person. Anything that's participant support costs is an exclusion. So your consumer services are an exclusion. So then you pull the base expenditure. So it takes whatever your direct, and this actually calculates itself. I can pull out our information and I can circulate the actual document.
That would be awesome. Thank you, Lenore.
Yeah, so then whatever the rate is in comparison to that tells you what the indirect cost would be. So I can share that.
I had a question. When we do our proposed budget for the new grant, do we need to put in there like the CANAR fee, CANAR conferences, like that? I know it's gonna break up into
Yes.
5 years, but with the budget, we need to put those in there too as well, right?
Yes.
Okay.
You would need to put that in out of town travel. The other thing as well is the issue of membership fees. We're at an interesting place with CANAR. Mid-year, and we're going to start having conversations with folks in membership. The membership dues have been locked in at $500 for a number of years. The question will be is the way our guidance is written is that for every 3 years we revisit those rates. And so The challenge for you guys is you're actively writing right now. Are our rates going up? We don't know. We don't know what we're moving forward at this point. The best recommendation I can give you is you may want to do a little bit of padding there in case. But also as well as, are there other organizations that you might want to seek membership with that you also include with that in the subscription, like your dues and subscriptions options? I was sharing with the board, we pay dues and subscriptions to the local chamber here because we need access to the employers. And so that's a fee we pay so that we have an opportunity to network with the folks that are moving and shaking in the employment fields out here. That's important to us to be able to get placements. And so that goes in that larger line item overall.
I'm sorry, I must have
Thank
missed.
you.
Where do we put that? The dues and subscription, is that under contractual?
It actually would go under other.
Other, okay.
Mm-hmm. Any other questions? Christopher, was there anything else on the CANAR end? I mean, we're in this really fuzzy place. And we'd hate for you guys to be caught in it, and it's awkward for CANAR too, on how do we move forward with that.
Something you wanted me to say? I'm not sure what your question
No,
is.
I was just asking if you had anything you wanted to, if they wanted to reiterate. And I'm actually sharing in the where did it go?
I just had a question, might be a little bit off subject. I don't know if it is, it's fine. But have you ever dealt with reimbursements? Like what? Like our tribe, we could do reimbursements, but it has to get approved through executive. So like how have you ever dealt with that before, Lenora? Or what is your
What
understanding of reimbursements?
what kind of reimbursements?
See, and it didn't really specifically say, because I'm new too. This is, my first year trying, I guess first time writing a grant. I'm a bit nervous too. I'm kind of feeling a little bit overwhelmed. But I mean, one of the things that kept coming up this last year was reimbursements. And I
So
did ask
what I will say is RSA frowns heavily on reimbursing consumers or any
yeah, I was
payments
just,
that go to consumers.
yeah, and I don't know if it was for our consumers. I thought it was for like if we were gonna do an art therapy session that we were able to get materials for it and then we would get reimbursed back. So does anybody else have the reimbursement on theirs? Or
I
would
don't
that be
think,
recommended
yeah,
not to?
I don't think reimbursement is a horrible thing. It just depends what your internal process is. So if somebody pays out of pocket and then gets reimbursed, it's really about what they're getting reimbursed for. You wouldn't have a line item in your budget for reimbursements. It's that you're getting reimbursed for items that are included in your budget.
Right.
Yeah,
So Alana,
that's what I was wondering too, was where would I move that into, like participant costs? Would that move to, because I'm trying to get that out of this budget too. I don't like it. It doesn't fit right with me because I don't understand it, but if I'm gonna reimburse, I was assuming it was gonna be for the materials for the consumer.
But
so
you have yeah, go ahead, Christopher.
So I want to distinguish a couple things, Atlanta. So one, if you personally buy something for a consumer that was in their plan, you can be reimbursed. But the minute the
Okay.
consumer says, I'm going to go out and buy that because I'm tired of waiting for you, but I want you to reimburse me. Now that's what Lenore's saying is heavily frowned on. So the minute you cut a check to a consumer, that is potentially a violation of the regulations. So even if it was in their plan, it's really questionable to do it that way. So we actually tell our consumers, I can never reimburse you. If you go spend your money on your driver's license, even though I've got it in the plan, I'm not going to reimburse you for it. You have to let me do it. Let me pay the Department of Licensing for your license.
So would this agreement, I mean, let's just say in general, would this be something we would put in the grant?
No, it's like
Oh,
what
okay.
Lenore was trying to explain. I'll say it like this. Let's pretend you are going to CANAR and you put it in the grant as training dollars. You're thinking about the airline ticket, you're thinking about the hotel. You put training dollars in the grant, and then you personally go spend the money to do that training and then get reimbursed for it. It was in the grant as training dollars. It's not written in the grant as reimbursement dollars.
Oh, okay. Gotcha. That makes sense.
Yes.
Thanks.
Okay, Amanda, you had a question?
Yeah, do we get timed out? Does grants.gov time out? If I'm in the workspace and you already answered yes. So
Yes,
I need to
it
leave.
will if you're idle after a certain period of time.
Okay, thank you.
That's why I just save. Let's see. Okay, Kyle, capital expenditures for special purpose equipment are allowed as direct costs, provided that item with a unit cost of 5,000 or more have the prior written approval of the federal awarding agency or pass-through entity. Yes, that's correct, Kyle. We all love Christopher. Okay. So the last thing I just want to be able to spend some time is talking about common things within your sections of your grant, unless the folks under Thomas, go ahead, you have your hands up.
This is Zhao again from about, actually it's on the application itself, the 424 about intergovernmental review.
The question about intergovernment review.
The application kit have two
Mhm.
places talking about intergovernmental review. One says this competition is subject to Executive Order 12372. And then there is another section, I don't know the page number. It says this is not subject to intergovernmental review. So it's like, is that subject to or is that not?
Let's pull it up. I've
Yeah.
always been told no, it is not. But
Governmental review.
It's one of those Executive Order 12372, Regulation 34 CFR. Dear applicant letter from December the 7th, it is on the second page.
I'm pulling up the application packet again.
Okay.
Give me a second.
So intergovernmental.
I think we're supposed to, if it's,
Share my screen.
I don't know.
To the
state,
we wouldn't.
That's the intergovernmental.
Governmental review.
What's the number? It's going to be easier to search by the number. What's that number?
One, 2, 3, 7, 2.
Okay, so it says this on, let's see which area. Okay, so on the dear applicant, we have not typically been. Okay, so it says yes, that it's subject to it. Let's see where else. It's telling me it's got it 3 times, so where's the 3rd time? Well, yeah, and then it says it's not. Let me pull up that section, and the other thing we can do is also report that there's contradiction in the announcement.
And August responded the same day I emailed him last week.
That happened with me too. This is Bobby. He responded almost within an hour.
So it says Executive Order 12372 is the intergovernmental review of federal programs and was issued with a desire to foster the intergovernmental partnership and strengthen federalism by relying on state and local processes for the coordination and review of proposed federal financial assistance and direct federal development. I'll be quite honest, I think it is no. Because it's not as if the states contribute to your funding. Even if you're not funded, the state has no obligation to pick up your caseload. So we can go ahead and email August that. Let me write down these page numbers. Of course, it doesn't have a page number. Okay, so this is under section 4. Application and submission. Number 2. Okay, and then, and let's see, let's make sure I've got the correct of which section of the application this is. Section B. Okay, I will email him. I see the question you have, Amanda, that interesting that in Alaska you guys have that interagency agreement. I think it's wonderful. But unfortunately not as common outside of Alaska. We've got 3 more minutes, so I want to be cognizant if there's any last questions. Okay, if there's not, we're going to go ahead and end for now, and then next week we will pick up with going over and starting to go through the sections of the grant, the actual narrative sections and and where you're scored. Okay. Thanks everybody for hanging in there, and
Thanks, Lenore.
yeah, it's no problem. We'll see you all next week.
Yeah, really appreciate it, Lenore.
Thank
Yes,
you,
thank you
Lenore.
so much. It's very helpful.
All right. Thanks, yeah. Bye.
Thank you.